Hi guys, this is Nikki, you also known as Faces Trader, and you're watching me on the Awesome 10X Live Global Market Update for September 10, 2020. Before I begin, let me just invite everyone that this September 12th, we are going to invite you to how to build your first ever 10X Global Stock Portfolio. So for those who aren't aware, we are giving a 2,000 peso fee with 1 month access to the inner circle. That would be $40 per month. It's an online event. Now is the best time to build your very first ever Awesome 10X Global Stock Portfolio. You can register there. And inside, you'll get, in this learning session, I will discuss the principles, the mindsets, and how you create your diversified global stock portfolio. I'll actually help you pick the global business trends and the businesses that you want to invest, the secular winners in those trends. This fee would also include a 1 month participation inside the Awesome 10X classes, wherein you'll get 24/7 life-assisted trading guidance for the Philippines and global markets, direct access to the Awesome 10X team, including me and Anton Diaz, daily Zoom live classes, recordings, exclusive Slack channel, and of course, feedbacks, ideas, exclusive content are all inside. So now let's begin. Today, actually, not Philippines. So a few things about the world's happening. Actually, yesterday was actually a good move in the US. You could see that there was a lot of bounces. You can see those. Yes, it is my birthday. So EVs as a sector is an awesome 10X trend. Just gonna show to you a lot of things. We have been seeing that yesterday the market bounced a bit. A few charts that I would share later, but a few things. Peloton launched new products. Some news first. So Peloton, the new Bike Plus, new treadmill. The original bike has been lowered to 1,895. New Bike Plus is 2,495. Original, it used to be 4,295. So this actually tells you that in the fitness, wellness, stay-at-home space, Peloton is actually gaining a lot of market share. And this move by Peloton, in terms of business, is correct. So you could see that this has been translating to more all-time highs for Peloton after dropping to $20 low. That would be during March 18. Sorry, it was 19. So this is already a 500% move. But I think that the trend is your friend. The business has been intact. You could see that in the shakeout crash in the past 3 days. You can see that from 91, it went to as low as 73. Now it's back to 91 based on those news. Anytime next month or next week, we could continue to see some sell-offs. You can see that earnings this day for Peloton, it could fall, just like what happened with Lululemon. But the beautiful thing about these vanity names, Lululemon, I think, had a problem on their earnings, and so it fell. But so it could continue to fall. But the beautiful thing on companies like this is you have to assess the runway. So Lululemon, of course, went from about $3 to $300. Take a look at the all-time chart for Lululemon. Lululemon month on month. Just check on the month. So Lululemon is a strong story for the yoga world from about $3. Indeed, you heard me right. No, actually, it wasn't $3. It was just $1. Then, $3. Yeah, it was about $3 to 360 or 120 times your money in about 10 years. Of course, a lot of people said, I've made so much money in Tesla, la la la. Of course, Tesla was 100 times your money, $17 IPO to as high as 1.7. But there are companies that doesn't have to be Tesla that makes 100 times too. And that would have been something like a Lululemon. At these levels, I would disagree. But take a look what Peloton could be in the future. It's something that I myself doubted during the IPO last year. But I think that the market knows something more, and that the market has, and the company has proven that it is worth studying, at least in the next few months, if it will give an entry. Then again, those who have this Peloton, continue to go long with your name. Congratulations, especially if you've got it lower than 30 or 40. especially during the COVID time, if you've been buying there. And this is a strong trend. And if people will continue to have fitness, and I think it's a secular trend anyway. So it is a secular trend. The question really is how many Pelotons would be sold in the next few years. And I'm going to watch for the earnings coming out tonight just to see what's happening. So I'd also like to share a few notes today. A few things. I haven't heard about this, but hyper growth and stack investing. True enough, I'm a fan of a lot of them. I'm a fan of their work, their articles, their videos. So they have a podcast, Seven Investing. I'm gonna listen to this. I think they're gonna talk about some SaaS names, and of course, if you take a look at the people who have done well, that's how you'd learn. I'd like to share a few things. This is Christian Reshoff, no? He shared that his 2007 to 2008, in light of the current correction, I want to share to you that a person who has a conscious mindset on secular trends with 5-year, 1 decade time frames could truly make so much money. Example, Netflix $3.30, that would be May 24, 2007, is now trading at $507. That would be 150 times, 160 times your money. That's Netflix. Now Amazon at $75 is $3,200. That is a 40 times your money. NetEase from $15 to as high as $470, it's 29 times your money. Nvidia $20 to $500, it's 20 times your money. ISRG, Intuitive Surgical, $30 to $700, it's 20 times your money. We can go on and on. Apple, $5 to $100, it's 18 times your money. Stamp, 12, it's 15 times your money. Adobe, 12 times your money. Home Depot, Pool, I'm not even sure what Pool is. IAC, the owner of Match.com, 12 to 120. Nike, 10, 11 to 112. ACN, Accenture, 25 to 230. So if you want to make like 8 times, 10 times, 20 times your money, it has to begin with, number one, this was a 13-year time frame. So it actually starts with a time frame of you asking yourself, what businesses would you want to buy and hold for the next 5 to 10 years? From there, you can either trade your way a part of it, and some of them you would really marry them for life. So this is Brian Feroldi, another motley fool whose mission is spread financial wellness. Tesla has declined how much? 19 times, 10%, 20%, 13 times, 30%, 8 times, 40%, 3 times, 50%, 2 times. But returns since IPO was 7,250%. That would be about 10 years ago. So what's behind you doesn't matter. And this one is important. A single arrow is easily broken. A bundle of 10 is not. Japanese proverbs. I'm going to share to you a lot of Japanese proverbs and wisdom of the day before we dive into charts. Science is a process, not a result. An awesome 10x portfolio is more scientific than you think. Scientific meaning you cannot break an awesome 10x portfolio with just one arrow. You have to shoot us with 10 arrows just to kill us, or rather maybe 15 to 20 arrows. In the same vein, an awesome 10x portfolio is highly diversified in several secular trends. So a science is a process, not a result. So we could be wrong several times, but we will not be killed, no? So it's the same way as being scientific about it. You have to be smart that you don't want to bet everything in one company. So you could see that Christian here showed how many companies here. How many is this? Many trends. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So typically people ask me, can I be concentrated even if I have 20 names? The reality is you can. Because there are a lot of companies that are in secular trends, whether it be in e-commerce, payments, streaming, entertainment. You could see that you don't have to be in just 5 companies to outperform. You can be in 20 companies and still outperform the normal index. Take note, these positions outperform the index by a magnitude of 10x. So the time frame was during that time, it was just up 100%. Had you bought the index, you'd be up 130% in the last 13 years. Had you bought Netflix, you'd have been 15,310%. So that outperformance is 15,178%. So truly, if you had invested in Netflix early on and believed in streaming, that would be you would be sitting with so much gains. In fact, this is also a good interview.
Well, that will happen sometime over the next
There's a
100
good
years.
interview about the Netflix by Kinsey Grant, Kinsey Grant Morning Brew Business Casual podcast, wherein she interviewed just recently Netflix. Inside here, there was a question: if you disrupted Blockbuster, who disrupts Netflix? There will be, and you know what? Reed Hastings said, the one that would disrupt Netflix would be, it would be about 10 to 20 years from now. There will be companies that will disrupt. It could be the metaverse, it could be gaming, it could be anything. But true enough, Netflix is trying to be ahead of the curve as much as possible, AR, VR, and so forth. So you truly want to surround yourself with smart people. This is something I want you to know. Smart people learn from everything and everyone. Average people only from their own experiences. Stupid people already have all the answers. That came from Socrates. So in order to find the best companies abroad and globally, we try to really think about the 10x concepts. No, we try to go and read and learn and listen, watch. That's really one way to detect 10x trends. And you have to keep going. This is important. You might be somewhere here and you gave up, but in just a few years' time, you'd be hitting 10x. So the important thing when you're investing, when you're learning, is that you really start small. You might start small and you might say to yourself after 6 months, this is pointless. Or you're starting your weight loss journey, and in a month or so, you're saying, this is pointless. I'm not losing weight that I desired. At the end of the day, you have to start small, and those might sound cliche, but really that's how you can do a lot of 10x moves in the future and even today. So that is true. That is something that Jeff Bezos said, Netflix said. It's all about accumulating little edges that will those small edges, when done over time, will become truly big edges, and you do have a 10x better company or a 10x better self if you simply start small with small edges. This is something that I want to actually study, the unity. This is more than a filing. Some people already wrote about it, so I just retweeted it. Unity is manifesting the metaverse. I'm going to read about it and study the Unity IPO, which is coming out. This is very good that John Ehrlichman said things that did not exist 10 years ago. We never had Zoom video before. If you recall, Zoom started, I think, 2012. TikTok started, I think, only the same thing, 2014, isn't it? I'm not sure. Live streaming as a trend just started about 7-8 years ago. TikTok, right? Short form live streaming. Now, Slack, Snapchat, Amazon Alexa, Apple Watch, the wearables, Chromebook, Facebook Messenger. We used to have IRC, Yahoo Messenger, right? Netflix Originals. Netflix Originals was 2013. Robinhood app, the one that disrupted the game for discount brokerage firms to actually hit it to zero. And so we can experience Charles Schwab, zero rates, interactive brokers for foreigners, it's just $1 fee. So it's truly democratizing finance globally. Cash App, cashless societies, iCloud, Uber Eats, food delivery, Instacart, Apple Maps, sports betting through DraftKings, not as a casino thinking, but just enjoying sports and betting just $40 or $50 if you want to. Google Classroom, Fortnite, Peloton, Lyft, AirPods, Stripe, Disney Plus, Apple Music. It's very important for you to see Instagram, Airbnb, Siri, Coinbase, Oculus Rift, iPad, WeChat, Xiaomi, FaceTime, Quora, Discord, Telegram, Roblox. If you think about it, the reason why you want to invest globally is because a lot of the best companies just existed 5 years ago, 10 years ago, and they are disrupting everything that we do today, from shopping to transacting payments, the infrastructure of the internet, Stripe, or those who are competition, which is Square, and PayPal wants to do it as well. Now, of course, this sounds cliche, but the Shopee, again, we're going to discuss. Shopee actually had a 9/9 sale yesterday, and the boom in traffic. Sorry for the inconvenience cost. Shopee sale, super shopping day in the Philippines. That's a good thing if you're a Shopee investor. The fact that Free Fire Max is doing so well, electric vehicles is a big trend in the future. That is good. That's why I'm sharing to you industry trends so that you have to think a little bit on the decades, not the days. Let's see. China's EV sales volume is expected to grow by 29% CAGR until 2025. What does that mean? From a current 900,000 vehicles, it could grow to a potential 4.2 million vehicles. So those vehicles could be from some Chinese Teslas or from Tesla itself. So why don't we take a look at some charts of charts? Tesla for one, after falling from about you could see that it fell from as high as $500 to a drop of about $330. That would be a significant drop of as much as 40%. Now, that drop could actually lead to an oversold bounce. That bounce could lead to as high as 390 or even at 430. At 430, can it go to 500? We don't know. So, but what we can see is that the temporary drop has been halted. And yesterday was the first rally. Some people might actually see Tesla today as a buy, 366, for a sell. For a sell, powerful move here at about 430. That would still be representing about 20% in a short term. Now, of course, some are long term, so really depends on your position size. Now, of course, there are some people who are also trying to fight the Chinese, the Tesla through a Chinese competition. You've got Li Motors, you've got Xpeng Vehicles. Xpeng is actually a new company, Xiaopeng Motors. It got listed. I'll tell you what, I was wrong. This green line here, I thought that was a buy, so I had that arrow. So I'm not always perfect. It went down. And Xiaopeng actually had an IPO at 15. So some of the people who have the 15 cost could still be taking profit here at 18. What I'll do with Xiaopeng is that I'll see how it moves in the next 3 months. Can it go down to 15 or can it even go down below IPO? So this is actually a good research report on Xiaopeng by Equalotion. So they were saying that currently, wait, yeah, thank you. Who delivered this? Wait. Just put it in the ref. Okay, sige. Thank you for the cakes. I'll thank you later. Salamat. I got Academia chocolate. I'm not sure the cake what it is, but thank you very much. Yeah. So actually today, there are really a lot of electric vehicles that are in the market. It's gonna be a competition. So you can see that Xiaopeng might be a good competition someday. This is backed by Alibaba, but you have Li Auto Motors, you've got BYD. They have a good hybrid EV as well. So from a pure EV standpoint, we are seeing a flurry of competition. So the barriers to margins for Xiaopeng might actually take a few years. So it's going to be a long-term battle. And so a lot of people, the concern on Xiaopeng is that can they battle with Tesla? Me per se, I'd say that the answer is yes. And my view is that all of these could be winners, whether it be NIO, whether it be BYD, whether it be Tesla, or so all of them. So let's take a look at some of the charts, no. So Xiaopeng, I don't know, from a chart perspective, Xiaopeng could even go to 15. So my buy here could go to as low as 11. So the beautiful thing here is that I diversify, so I'm not always going to be down. So that one is a drawdown on my end, but I still hold it. Let's see whether I can buy it at 15 or 16 or 14 or 12. So I'll wait for it. Now, a lot of the vehicles, let's talk about some electric vehicles. So BYD, I think, is consolidating. This was a breakout at 57, rally to 90. That was a 50% move. This was a consolidation and a breakout here at about $80. BYD isn't just an electric vehicle. They also have batteries. They manufacture batteries, which could actually be sold to other companies such as electronics who need the batteries. So phones need batteries. A lot of components would need batteries, not just electric vehicles. So that is something that I think is also happening for BYD. This is still trading near all-time highs, if you notice. From a weekly standpoint, BYD, let's take a look at the BYD. At 80, that used to be the all-time high of 2017. And it was also the resistance in your 2009. So at 18 to 90, it will be interesting if BYD can finally break above $90. That would be a 10-year high. So I'm not sure, but it's something that I have in mind to see. It is an interesting company on the electric vehicles. And I've been looking at it since 48, actually. I've been buying since 48. So there. Another Chinese company that I might like to discuss would be some Geely Motors. Geely. So it looks like Geely is a neglected company in China, even if they have some good vehicles in the electric vehicle. Given that electric vehicle as a company or as a sector is in my view, a secular trend, this $16 Hong Kong is actually something that is interesting for me. Looks to be a flag to me. This was a breakout and then a flag. That is a continuation. It could rally to 22, 25, 27 someday in the future if they prove that deliveries in the Chinese electric market is doing well. So Geely Auto and all these Xiaopengs and Neo, Li Motors, all of these are like China clones or China Teslas. Um, and some companies have gone frothy in my view. So Neo has gone frothy from about 2 to 20. I could be wrong. I think that 20 would be a take profit zone. But if Neo falls somewhere at about 14 or lower, then it could be considered. So we'll have to see what happens. Of course, there's a lot of competition. Lee Motors, I'm not sure if it's listed. I don't know. Is Lee Motors listed? Yeah, Lee, L-I. So let's take a look at Lee. Lee Auto is just consolidating right now. So it's just there at 15.8. We'll see how it goes. So you could see that it rallied to 24 and now back at 15. So there's a lot of people interested in electric vehicles. The US has a lot. Workhorse is at new highs, all-time highs. This is now trading at 24. This is for electric trucks. So of course, you've seen Elon not just do sedans and sports vehicles. They also have trucks, the Cybertruck, right? So Workhorse is intensively only for delivery of trucks, so electric trucks. These are still doing well, and US UPS is a partner of Workhorse. They've been ordering from Workhorse. What else? So there's been a lot of SPAC companies in the electric space. There was an electric mania. This is Shell. It's still 20. Now it's about 50, 55. Some SPACs that we might need to understand and explain. So we have been already promoting first forum merger. FMCI is at 25 now. It can go higher. As long as it's above 22, I'd say hold on to your cauliflower. Forum FMCI is Tattooed Chef. Cauliflower crust pizza. Now, what else? You are seeing, of course, Graph. Graph went high already from about 16 and 14. This is now 30 bucks, almost double if you got in here. So sorry, not almost double. That is already a double if you got near the lows. So 100%, some people might be taking profits, but I think that profit taking would be limited here at about 25 or about 24. So I don't think it will fall at 20. So at 25, maybe that's the next higher low for Graph. Now, of course, a lot of SPACs. So let's take a look. Some GMHI, this is now a higher move. Can this go higher highs and higher lows? So I think it could move. So yes, you could see that these arrows tell you that I'm a bull. And then what else? SPACs. Okay, so actually, other than SPACs, we've seen some crowd favorites. Zoom Video. Zoom Video right now is wait. I just have to answer. Later. So there, Zoom Video first rally yesterday at about 380 to 390 from that low of 350, 360. So I've been buying, actually, you can see that arrow. I've been buying some Zoom Video. I think I can go to 440 or 470. Great numbers. Even if it falls, there will be a lot of support here at about 280 to 320. This is a crowd favorite that will always be bought on dips. Another crowd favorite that will be bought on dips, especially with good news, was Beyond Meat. So you could see that in the last few days, this was also something that we highlighted that we bought. So at 121, it's now 138. That is quite a breakout from 134. I'd say it can go to 158. Of course, I already said about the China factory that Beyond Meat is doing. And from a standpoint of some people saying that it's expensive, I think that the reason why there's a premium for Beyond Meat is the same reason why there's a premium for Tesla. And because Impossible Foods, which is a competition of Beyond Meat, is not listed. So in the plant-based trend, this is a secular trend. And if they can successfully hit that Chinese market, Beyond Meat can even go as high as 180 or 200. So let's see how high it goes. What else? We have been promoting, of course, PayPal. PayPal is something that we also bought in the recent sell-off. You could see that strong earnings here. And I think that the payment trend is continuing. So PayPal is not perhaps a 10x move at this point, but at 190, 180, when I saw that, that was a great buy. So good move up yesterday, but it could go higher, 200, 205. I think any drops at 180 or even at 170 would be bought. There was a take to secondary offering, right? That's why it fell. But I think that whether you bought it at 170, now it's at 158. Let's read the take two secondary offering. Good numbers for take two. Wait, finviz.com. I'll read the news on take two. There's a lot of great companies in the US. So you could see that this is also a good chart. Joy Inc. Joy Inc. 74. Went to 90 resistance, back at 74. This is a bounce play, so buy here, sell there. Choppy, but I think long-term trend on seculars is good. Etsy as well. Great moves. Of course, e-commerce. Great numbers. At 140, down to about 112. I think this is also a good rally to enter into. So Etsy here is a buy for me. Farfetch, strong earnings. This was a pullback from about 30 to 25. Any drops, I think, at about 22 to 20 can still be bought. So if you didn't buy it at about 13 or even lower, I'd say that drops on Farfetch would be bought. Tesla here, I think it's a tradable move. And Bilibili, yes, Bilibili, the YouTube of China. So I believe in streaming. So I think this one at about $40, if it falls, can actually be a good entry point. Last news, Take Two. Take Two, you can see that this 158 is actually a support, and there was an expansion. Okay, Take Two Interactive launches the NBA 2K 2021 at $59.99. How Game Lancer is helping gamers earn revenue as freelancers for hire. Let's read a few things. The Outer Worlds. Should you buy Take Two? So I'm not sure if Take Two actually did a secondary. I think I read that there was a secondary. Let me find that news. Take Two, but I think like that is not a bad thing. It's actually okay for a company to do secondary offerings because it enhances their balance sheet. So actually, like when Tesla sold $500, $5 billion share offering, it is a good thing because for long term Tesla, it will help them save on debt. They don't need to pay debt anymore. So October 2nd options now available for Take Two. Why investors are paying a premium for Take Two? Was it a different company who did a secondary offering? I might have forgotten. Anyway, so either way, the drop at 158 is good for me, I think. If you have Take Two or you don't have Take Two, I think that you have to check this out on your video games sector. So Take Two, I think, is nowhere in the expensive zone, considering their growth. You can see that from March, it rallied from 110 to 180. It hasn't doubled yet. At 150, that's just about 40% increase, despite the growth of about 100% and more on their earnings report. So I think that you have to understand and learn more about how Take Two is growing their games and their mobile game empire. And you might actually consider this. From an EV/EBITDA perspective, market cap is 18 billion. What is their EV/EBITDA? Where is that? Usually, so for games, it's being taken a look from EV/EBITDA perspective. It's not here, but actually, I recall that it is cheaper than Activision. So I understand that some people love Activision as well. Where I actually like the sector. It doesn't matter whether you like Activision or Take Two. All of them are good. So as you can see, Activision also bounced. Nvidia bounced last night as well. But after falling from about 580 to as low as 480, some people saw that this correction is actually a time to buy. And we agree. So although it can have a resistance here at 550, if Nvidia drops anywhere at 450 or even lower, that is actually a good opportunity for us to actually enter some of these companies at great businesses nonetheless. So talked a lot. Let me see some commentaries, if any. Thank you for the birthday greetings. I will check some of the questions. Tesla is 374 after market. Okay, that's good. Are you still bullish on Jumia and work? I'm not actually bullish on Jumia. I was bullish at about 2 and 4.7. 2.7, 4.7. In fact, we sold Jumia early. and gave a sell at about 8 to 10. Some people were smart enough to hold. They had been able to sell at 25. I actually believe that Jumia is not worth any price above $10. So I think right now Jumia is trading $8. It's fair. I wouldn't touch it at 8 if I wanted to buy Jumia. Probably at 2 to 3, $4. So I won't buy Jumia. Slack has a lot of problems. Work. So work, I think, so me personally, I've been using work. I've been using Slack. I think that Slack at 24 is cheap, but it might have a selling pressure at $30. This one, you've got a lot of sellers resistance because people got disappointed on their earnings front. So after earnings, the results, it fell like 15% overnight. So I wouldn't buy work. If you have work at $30, I wouldn't buy at 24. I'd say that if you have work at 30, you want to sell at 30, sell your losers and just exit. The problem of work really is that it has a lot of competition with Microsoft. Microsoft is a threat. Microsoft Teams. Of course, there's a lot of remote work collaboration. The only thing I think that will save work is if they fix their business model. Because right now, me as a Slack, I'm a free user. I'm not paying. So from a revenue standpoint, both Twitter and work are companies I use. Like I use Twitter daily. But I don't think from a business model perspective that Twitter is a good business. And I think that work is not a good business from a revenue standpoint. Why? Because they currently charge $8 per member. So if I have, let's say, 100 members, I have to pay $800 for full access to Slack, which I think is limiting, especially since I'm just a normal entrepreneur, just doing online education. So I think that it is not a big market. What they're doing with their pricing model is wrong. It's going to be limited if they're going to continue with that business model. Zoom is 398. Zoom I will hold. So Zoom, I have it. I bought it at 350 to 360. In fact, I'm willing to buy Zoom at 300 should it fall. So even if it goes 450 tonight, I won't sell it. Considering how high Netflix is now, can I still make money? I think Netflix is not at 10x at this point. Roku might be. But if you have Netflix, it's more of like a buy at 5. Actually, if you bought at 500, I think it's steep. I would only buy Netflix at $420. So I wouldn't buy Netflix today. But if I have Netflix below, I'll just hold it. So it's not a pressure to sell it. Are you better off moving the money to another stock? Depends really on your cost. If you have cheap cost, then you can hold. But if you have high cost, I don't think that Netflix at these levels will give you a 10x. I suggest that you switch to some IPOs. There are great IPOs coming out. Is it advisable to use leverage during this bounce? Me personally, I have exited my leverage. I have cash because I am prepared for a 20% crash. I think that using leverage at these levels is not recommended. So it was easy to do leverage at about April, May, even June. But now at August, September, I'd say doing leverage now is risky. Why is Copen down? Is it still a buy now? I have Copen. I continue to believe in it. So what I do here is that 125, 130, I would buy it. And then I'd sell some at 155 to 160, knowing there's a resistance. And a strong pressure at 180 to $2. So Copen, I think, is a wearable trend. It's a secular trend. Copen is, it went from about 20 cents to $2. It's 10x in about 5-6 months. Some people want to take profit, but I think that Copen has a better future than a risk. So if you believe in wearables, I'd say that Copen is present in everything. It's present in Samsung and Google and even Microsoft. So I'm safe with Copen. I don't mind the short-term downtick. I'm a buyer. Actually, I've bought some Copen 135 below. What do you think of the GameStop earnings last night? I think GameStop tonight is opening at $6.50. So I got hit because I bought this at 7.7. I didn't sell at 8.20 or 8.30 when it rallied. I have it, but I think at $6, it's truly cheap. So GameStop is $5 cash per share. E-commerce as well. Chewy is there, 9% stake. The short float are still there. So presently, I'd say that if GameStop even falls at $6, I might actually buy if it bounces there. So I don't see any problem with the earnings. Right now, we are seeing that any earnings, whether good or bad, is selling down 10 to 15%. true enough, GameStop, Slack, their earnings weren't really bad, but they got punished like 10-15%. Just like CrowdStrike, it got punished about 10% after a great earnings, if you ask me. So I think like the market truly right now just wants to take profit. They want to make excuses when you don't raise guidance. So I don't see a big problem. Is Workday a buy? I'd say that Workday had a good number and the secular trend is good, but it's not my go-to given that the market has sold a lot. So it's not like my go-to. Like I think like there's a lot of great buys. Then again, Workday is also good if it falls 190 to 200. I think Workday now is 210. So it's not a high growth business. I mean, if you notice, we had the choice to buy Zoom Video at 350. We had the choice to buy some PayPal at 180. So at that point in time, Spotify was also 240 just a day ago, right? So I think like C Limited was like 138 last few days ago. So I think like from a favorite crowd perspective, I focus more on my favorites. But Workday is a good company. So at 210, at 190, I think it's going to be a buy. Secular trend, I love a lot of solars. I love video games. SaaS names is not something that I'm too confident in. So Workday is more of a SaaS pick. So SaaS pick, it's okay, but it's okay. It's not like my best idea. That's it. Thank you very much, and see you again tomorrow. And I do want to invite all of you for my for September 12th. There's an Awesome 10X portfolio class wherein I'm inviting everyone to actually join, but you have to register. It's a 2,000 pesos to register for that class, but it also gives you a month to actually see all the things that the Awesome 10X classes are there for you, especially IPO coverage. We are covering quite a lot of IPOs. And I think September, October, November, December, the 10X moves would come from IPOs and SPACs. So it might not even come from the listed companies today. It's going to come from IPOs and SPACs. Thank you very much. Bye-bye.